Good morning, everyone. Today is Thursday, June 29th. Thank you so much for joining into our weekly webinars. Still yet to determine what we should actually call them, since there's a lot of acronyms flowing around. As many of you know, we've been running these webinars since August of 2013. They were the ACA webinars. Then they went to the ACA, AHCA, and I just said uncle. I can't add another set of acronyms, so I'm just going to label it for now, Healthcare Reform Webinar. How's that? So as usual, we do have a couple new listeners on today, and wanted to take a few minutes and introduce myself. My name is Deb Wilkinson, and I am the Vice President of the Health Plan Options Department here at URL. I oversee the group and individual health markets, or what is left of the individual health markets in Pennsylvania. So, again, wanted to introduce myself. The format is really created to have you come every week and hopefully get information on this ever-changing legislation and to ask the questions that you're being asked in the field. You can ask questions in one of two ways. You can raise your hand icon on the control panel to the right of your screen, or you can type questions into the question box and I will answer them at the end of the webinar. So just with a show of hands, if you can just let me know if you see my screen and you can hear me okay, I would appreciate it. I'm not seeing some hands. Let's see. All right, there we go. Hands up. Thank you so much. All right, so let's just jump right into the agenda. A lot even happened overnight. The Senate, of course, released last Thursday, the discussion points for what they're calling the Better Care Reconciliation Act. A lot of controversy, a lot of similarities to the House bill, the American Health Care Act. And what I wanted to just talk about briefly is to kind of go through some of the comparisons. A vote was actually supposed to take place, then it was going to be delayed. They expected it to take place after the July 4th holiday and before the August recess, if they will take an August recess. So a lot of people felt that they could get there. Mitch McConnell came out earlier this week and said, nope, we're not going to get there. There were 7, and then there were 9 opposing GOP members that they could not get that vote. So interestingly enough, last night I was watching some news and Senator Rand Paul came on and had discussions with the president and, of course, the administration, and is suggesting that they actually split the bill so that they can gain traction on those items that, the more conservative Freedom Caucus members can approve. And then for some of the funding, the subsidies, all of that, split that onto another bill that some of the more moderate, Democrats would approve. So I think that's the route they're going to go, and they even seem to indicate that this could actually take place by tomorrow. So very interesting things going on. We'll see what happens. But again, I wanted to take a few minutes to kind of go through a high level of comparison. I did actually pull the slides out and add them to the handout, so you can either print those out, or if you want, I can email those to you. Just shoot me an email, and I'll get those to you. Also in my newsletter, the same article is going to be in my newsletter, so you could see the comparisons. So let's just jump right into it. Before I go too far, I want you to all know, too, that when I do my webinars, it's really specific to the under 65 market for individual and group health. So there are some elements of this law that we've all heard on the news that, could affect seniors, or they're saying could affect seniors. But, as far as what I focus on in my webinars, it's really specifically to individual and group health, not Medicare. All right, so Who would be covered? Well, this is the American Affordable Care Act. We all know about the individual mandate. The House bill is calling for a 30% surcharge if there's a break in coverage. The Senate is saying if you have a break in coverage that you're going to have a waiting period. So with the House bill, there was a 12-month look back for any breaks in coverage to charge that 30%. For the Senate bill, if they have a break in coverage and there's no qualifying event, they're going to have to wait anyway, which is the situation we have now. So I don't see that as a big issue. And of course, some of the more moderates would appreciate it because people can still get coverage and they're not being charged more. Employer mandates and individual mandates, they are actually going to be eliminated. But just of note, it's not that the law and the mandates are going to go away in this proposed legislation. It's actually that they're zeroed out. So as far as the employer requirements, it looks like they may still stand. However, there's no penalty, a zero penalty for not, aligning with the employer mandate. So I thought that was important to notice. And the 26-year-old coverage is not going to change whether it's the current law, the House bill, or the Senate bill. How they would pay for coverage, of course, right now we have subsidies based on income, age, geography. House bill suggests the tax credits would be aligned just primarily on age, and the Senate bill actually more aligns with the ACA, which is based on age, income, geography. The difference is that any subsidy could be applied toward the toward any, like a catastrophic type plan. The mandated or the subsidies themselves, the Senate is proposing 100% to 350%. So the current law goes up to 400%. So, again, they're reducing those that would be eligible for any subsidies. And the cost-sharing subsidies, which is really the provision within the law that the insurers are worried about, so they can be a little bit more stable in what will be funded or given to them through federal funding to take care of those cost share reductions. So House bill ends and Senate bill ends in 2020. Pre-existing conditions, of course, are not an issue right now. They're covered. The House bill suggests that if the state allows for a state high-risk pool, that they could charge higher premiums. There's an $8 billion fund to help with that transition, help stabilize that market. And the Senate bill goes further, that basically, they're not going to be able to charge more, but based on how states that elect waiver programs structure the waivers, there could be conditions that could be subject to pre-existing or just not covered, again, based on the way the choice of the essential health benefits and the way that a state that elects this program would structure the waivers. So they pay for coverage. It's a 3-to-1 ratio now. Both the House and the Senate suggest a 5-to-1. The HSA for individuals, the contribution amounts, of course, we see those with the ACA. In 2018, for the House bill, they're suggesting that it's tied to the maximum out of pocket, which is what is being proposed by the Senate as well. High-risk pools, this is just funding on the high-risk pools if states, choose to do that, and then also some funding, again, to stabilize the market for the high-risk folks and insurers. This is the big one, this proposed change to Medicaid. This is the one where you're hearing all over the news that, everyone's going to die, the seniors are going to die in nursing homes, et cetera, et cetera. But I thought it was really important to kind of focus a little bit on this, and again, this webinar is not geared towards the seniors, but I think it's important to kind of see how we got to that, that sort of chaos in the news, scaring everyone about seniors and any reduction in Medicaid. So we all know how the ACA works. It's entitlement program, open-ended matching federal funds. The House bill suggests a per capita amount, a block amount to have states you know, kind of determine how best to use those funds. And the Senate, it does the same, but it would increase more slowly than the House bill, so it really actually reduces the spending a little bit further, you know, our national spending. The ACA covers Medicaid up to 138%, and the House bill says if you haven't expanded, you only have this year, but you're not going to get the same federal matching funds if you, you know, are late to the party state. And the Senate is saying that they're going to, for states that expand Medicaid, the federal government would pay a smaller portion of the cost starting in 2021. Now, here's where I want you to kind of pay a little bit of attention. You know, Medicaid right now, the CBO, and you know, the CBO has figures all over the place, but in these they're consistent. The CBO says right now in 2017, we as a nation will pay $393 billion towards Medicaid. With the ACA, if nothing changed, in 2026, in a decade, we will be spending $624 billion. So again, 393 currently to 624 billion in a decade. What the Senate bill and the House bill actually does is it takes that 393, which is the, you know, the same whether any other bill is passed, and they're increasing Medicaid funding to $464 billion in the next decade. So that's a $71 billion increase, an 18% increase in Medicaid funding. And you know what the left is really doing is essentially saying, well, Medicaid's being cut. Well, it's certainly lower than what the ACA has, but it's not being cut, it's actually being increased. And I think they're making, me personally, I think they're making a pretty far leap saying that if Medicaid is reduced from what the ACA is, that seniors would not be able to get funding, or there would be less funding available for their nursing home care. So I think it's a big leap to make, and I just thought it was important to, at least for those of you that deal in the senior market, to kind of understand that Medicaid is not being reduced. It is being reduced from the ACA, but not reduced and cut from the current levels. Okay, other key elements of the plan, you know, it talks about essential health benefits. House says you could change it. States can elect different things for the essential health benefits. It's the same with the House and the Senate bill. Planned Parenthood on the ACA is eligible for Medicaid reimbursements, but federal money cannot fund abortions. With the House bill, they're going to, and the Senate bill, they would put a one-year Medicaid funding freeze on Planned Parenthood. And ACA says you cannot have any annual caps or lifetime max caps. And the House says the caps aren't changing, but depending on, again, on how the states interpret their waiver programs and essential health benefits, more types of care could face caps. And in the Senate bill, again, it's saying the same thing, basically no ban on the caps, but how they elect these essential health benefits as a state. Oh, so that's a lot of information. Let's go back to our original agenda. And of course, if you have questions, you know, just formulate them, and hopefully I can answer those at the end. So let's jump into our next bullet point. I mentioned this last week. Capital Blue Cross is enacting an auto renewal project. It started for the 7/1 renewals, and if you don't get your paperwork, your decision for your group in 10 days prior to the renewal date, there will be some issues. And we all know that during fourth quarter there are a lot of issues with delays in cards and billing issues, etc. So, you know, again, I'm going to ask you to please be mindful of that time frame, because there could be, if you wait past those 10 days, there will be billing issues that are going to take time to fix. And, your clients can holler all they want, and you can holler at us all you want, but unfortunately, if there's a billing issue, it's going to take time to fix. So please be mindful of the 10 days. They could have their plan change delayed, and we all know the issues with ID cards. So again, for the most part, or for as much as possible, please try to be mindful of those time frames. Aetna also came out saying that they're implementing an early deadline for submission. So if you want a 10/1 effective date, all paperwork is due by September 11th. 11/1 effective date, it's due by the 10th of October, and December 1st effective date is due by November 10th. So again, that's even earlier than Capital's cutoff. IHC, their short-term product, there are new rates for 7/1 effective dates. They are changing today. So if you are currently using paper applications, they are no longer valid as of today. If you're using an online enrollment for IHC, then you're fine, because the rates online are going to be changed. Again, they're changing now today. Talked last week about Capital Blue Cross. There are some groups that have a 12/1 renewal with a calendar year plan. So they're trying to get everyone back to contractual years. So for those groups that are hanging out there with a calendar year renewal and a contract year renewal and a calendar year deductible, Capital is going to do $100 per enrolled premium holiday for those groups that elect to go contract year. So please take advantage of that. I know there are a few groups out there that it really causes problems for, so let's certainly take advantage of that. We also strongly suggest with Cap Blue Cross paperwork for renewals, for new business, sending an eGEMS paperwork. It's beneficial for everyone. When we get terms or additions, it's easier to go into the system, get them into the eGEMS system. There's no chance of things getting lost. There's no chance of bad data. There's no chance of errors if we're doing it. So again, if you need that eGEMS paperwork, we're going to be pushing it. So please try to get that in as well. Again, it benefits everyone. Sentinel Elite, which is Highmark's and independent, I guess, verification after you do your FFM certification. Highmark and independents need you to go in and complete their ethics training. It's just a few slides to go through, but that deadline is tomorrow. So if you did your 2017 FFM certification at the end of last year and did not do this additional step, you have to do that, because if there are FFM cases sitting out there from Highmark and you have not yet completed 17 registration with Highmark, they will not pay you even the small amount that they are paying for any of those cases still on the books. So again, take some time if you haven't and do that today or tomorrow. August 23rd from 8:30 to 11, I'm having a seminar here at URL. PrimePay is sponsoring the seminar. It's a 2CE seminar about the top 10 items to review for healthcare reform compliance. I think that it's timely for your fourth quarter business, and it's going to be very informative and help keep you informed and also your clients compliant. So I think if you have the time, please register for that. It's in my newsletter, the registration link, or you can also register from our homepage. Speaking of registering, if you've not yet registered for our Medicare Connections conference, which is September 6th, or our Leaders Conference, which is September 7th, take some time to do that as well. There is information on our website as well to register. You don't have to register for both days, but you can. It's encouraged. If you want to learn more about Medicare, then go to the Medicare Connections web seminar on the 6th. If you want to learn more about annuities, life, health, ancillary products, and individual specialty products, then the Leaders Conference is something on the 7th that you would be interested in. But again, a lot of you do all lines. So September 6th and 7th, please register. And that brings us up to the end of our webinar for today, and hopefully you have some questions to ask. Let's see, while you're forming those questions, I'll remind you that our next webinar is Thursday the 6th. So there's only one question. Mario says, so they will save the group $100 on their monthly premium for switching to calendar year versus 11/1 or 12/1 renewal. Will they provide deductible credit? No, you know what, Mario, I don't know if they're going to provide deductible credit. I would imagine that there's going to be something, and it's $100 per enrolled premium holiday. So if they're a 12/1 renewal with a calendar year deductible, they essentially have a renewal 12/1, a reset of deductible, and then they get a reset of deductible again. I will find out the details, but to my knowledge, they've not provided additional details yet. So I'll get them for everyone and update everyone next week. And Mario, if I get them before, I will email them to you as soon as I get them. I also included the slides as a handout, as I mentioned, so they're there for you if you want to print out. That's it for the questions today. I either bored everybody or over-informed everyone, so I hope it was at least informative to you. And I wish you all a very, very happy 4th of July weekend and a safe and happy Independence Day. Go out and enjoy the weather and enjoy time with your families. And thank you again for joining in. I'll talk to you on the 6th. Bye-bye.